Hey everyone, and welcome. I am so glad you're joining me for this explainer. Think of me as your personal financial coach today. We are going to tackle something that honestly feels like a giant, confusing maze when you're just starting out: building credit from scratch. Our mission today is to completely demystify credit, take away all the stress, and give you a clear, actionable game plan that you can start using the literal minute this explainer is over. Okay, let's dive into this.
When a lot of us hear the word credit, it's super easy to feel like you're about to take this incredibly intimidating test that you haven't even studied for. But I want you to completely flip that mindset right now. Credit is not a trap. It is actually a powerful key. It's the key that unlocks your financial independence, helping you get better rates on a car loan, lease your very first apartment, or eventually buy a home. So if you are ready to build that future, you're in exactly the right place.
Here is our step-by-step game plan for today. 1. The invisible scoreboard. 2. FICO versus Vantage Score. 3. Moves that impact your score. 4. Your first credit tools. And 5. Check and correct your record. Let's get started.
Section 1. The Invisible Scoreboard. Understanding your credit.
Whether you realize it or not, your financial life actually has a scoreboard. Your credit score is a 3-digit number, usually sitting somewhere between 300 and 850. Now, when you're first starting out, you essentially have a blank or non-existent file. But what is this score actually tracking? Well, according to Experian, a credit score is simply a mathematical formula predicting the likelihood that you'll fall at least 90 days behind on a bill within the next 24 months. It's a risk predictor. The higher your score, the less risky you look to a lender, and the more likely they are to offer you their absolute best rates.
Section 2. FICO versus Vantage Score, the rule makers.
Here in the United States, two major companies pretty much dominate the credit scoring industry and act as the ultimate record keepers. You have probably heard of FICO, the traditional industry leader, and then there's Vantage Score, which was actually created by the three major credit bureaus teaming up. Now here is a massively important distinction for beginners. FICO requires you to have a credit account that is at least 6 months old before they will even generate a score. Vantage Score, on the other hand, can score you with just 1 month of credit history as long as you've got at least one account on your report. So for someone starting entirely from scratch, Vantage Score might pick up on your responsible habits way faster.
Section 3. Moves that impact your score, the big plays.
All right, now that we know who is keeping score, let's talk about how you actually score points. If you want to build a rock-solid foundation, you have to focus your energy on the metrics that actually move the needle. 35%. That is a massive chunk of your overall score, and it represents your payment history. Because credit scoring is all about predicting if you'll pay your bills on time, your past payment behavior is literally your most critical factor. Making your payments on time every single month without fail is your absolute most important habit. Just one missed payment can cause a huge drop in your score. Set up autopay, set calendar alarms. Honestly, do whatever it takes to protect this 35%. The next biggest slice of the pie is 30%. And this represents your credit utilization. This is basically just how much of your available credit you are actively using. Lenders look really closely at how close you are to being maxed out. Say you have a credit card with a $1,000 limit and you spend $900 on it, you're utilizing 90% of your credit. The Consumer Financial Protection Bureau actually warns that maxing out signals major risk to lenders.
So how do we hack this utilization game? Here are your actionable tips. First off, keep your balances as low as possible, ideally paying them off in full every single month. You can also request credit limit increases from your card issuer. Think about it. If your limit goes up, but your spending stays exactly the same, your utilization ratio drops naturally. And look, while the golden rule is to keep your usage at no more than 30% of your total limit, experts note that aiming for 10% or lower is going to yield the absolute optimal results for your score.
Section 4. Your first credit tools. Getting the gear.
Okay, we know the rules and we know the big plays, but you cannot play the game without the right gear. When you have zero credit history, traditional lenders might just turn you away. Thankfully, specific products exist for this exact situation. Here are 2 of the most effective starter tools available. First up, secured credit cards. You apply for this just like a normal card, but you provide an upfront cash deposit, usually between $50 and $300. The bank holds this deposit and gives you a credit line matching that exact amount. It completely removes the risk for the bank while you build up your track record. Alternatively, we have credit builder loans, which are often found at credit unions. The bank places a small loan straight into a locked savings account. You make small monthly payments over 6 to 24 months to build your payment history. At the very end, you actually get the accumulated money back. It's a win-win.
Now, if those don't fit your needs, you've got other great options.
If you're in college, student credit cards have way more relaxed history requirements. You can also become an authorized user on a trusted family member's card, safely piggybacking off their good credit history. Retail store cards are another route. They are generally easier to get, though just a heads up, they do come with lower limits. Finally, if you rent an apartment, look into third-party services that report your on-time rent payments to the credit bureaus. It is a brilliant way to get credit for bills you are already paying anyway. Well, it's super exciting to get your first credit tools. I have to act as your coach here and throw a quick caution flag. Avoid applying for too many new credit accounts all at the same time. Every single time you apply for a credit card or a loan, the issuer conducts what's called a hard inquiry on your report. Having multiple hard inquiries in a short time frame can temporarily drop your score, and it just makes you look like a risky borrower to lenders. Pace yourself and space out your applications.
Section 5. Check and correct your record. Playing defense.
Building credit isn't just about playing offense and scoring points. You have to play defense too. Think of it as a marathon, not a sprint. You really want steady, upward growth over time. And let me tell you, watching that score climb is incredibly satisfying. But it requires you to stay engaged. Regular monitoring helps you spot areas for improvement and ensures your hard work is actively protected from random clerical mistakes or even potential fraud.
So here is your defensive checklist. Step 1. Visit annualcreditreport.com. By law, you are entitled to a totally free credit report from each of the 3 major bureaus once every 12 months. Step 2. Thoroughly review that report. Look for accounts you don't recognize, late payments that you know you made on time, or anything else sketchy. Step 3. If you see something wrong, immediately request an investigation to dispute and correct those errors. Do not let a simple clerical mistake drag down your hard-earned score.
I really want to highlight this quote directly from the Consumer Financial Protection Bureau because it perfectly sums up our entire defensive strategy. The first and most important step in building and maintaining good credit is to know and understand what is in your credit report. It's simple. You cannot fix what you don't track. Taking ownership of your financial data is honestly the ultimate sign of financial maturity.
So, here we are. You now have the complete playbook in your hands. You know how the scoreboard works, you know the big plays to make, you know exactly which tools to grab, and you know how to defend your record. The only thing left to do is take action. What is your financial score going to be a year from today? That is entirely up to you. Take your first step today. Start building, and I cannot wait for you to see your own success. Thank you so much for joining me on this explainer, and I will catch you next time.